Welcome to the deep dive. Today we're going to dive into Bharat Forge.
A global forging giant.
Yeah, we've got press releases,
Hmm.
we've got financials,
Yes,
we even have an investor presentation to get through.
we do. It's a lot.
It's a lot to digest, but we'll break it down and get through it.
Perfect. So, let's start with the big news. Bharat Forge's board met on November 14th, 2024.
Right?
To discuss their second quarter results for fiscal year 25.
Yes.
And it seems like they've got a lot to celebrate.
They do. Their performance has been very strong, both on a standalone and consolidated basis,
Okay.
exceeding the numbers from the same period last year.
Very impressive, especially in today's market.
Right.
So let's unpack those numbers.
Okay.
What kind of revenue are we talking about?
Well, their consolidated revenue from operations hit $36,805.08 million
Okay.
in Q2 of fiscal year 25.
That's a big number. How does that compare to last year?
For Q2 of fiscal year 24, consolidated revenue was a bit higher at $37,741.87 million.
But what's interesting is their standalone revenue, which focuses solely on their Indian operations,
Right.
that jumped to $36,885.08 million from $22,466.67 million in the same period last year.
Wow. Okay, so even though their global business saw a slight dip, their performance in India really took off.
Yeah,
That speaks volumes about their ability to navigate the global landscape
absolutely.
and capitalize on growth in their home market.
And this making it India for the world approach is evident in their global footprint.
Right.
Their investor presentation shows that in fiscal year 24, Europe actually contributed the most to their consolidated revenue at 35.3%.
Wow, more than even India itself.
That's right.
Okay.
Then comes the USA at 25.1%, and India is actually third at 24.4%.
Wow.
This dual shore manufacturing strategy clearly gives them a competitive edge.
So it's like they're tapping into the best of both worlds.
Right.
Now, we know forgings are their bread and butter.
Yes.
But I'm curious about their diversification efforts.
Sure.
What else is contributing to their success?
While forgings did account for 85% of their consolidated revenue in fiscal year 24,
Okay.
their strategic diversification into the defense sector is a key highlight.
Okay.
This segment contributed 10% of their revenue last year and is projected to be a major growth driver moving forward.
It seems like they're not just sticking to car parts anymore.
Exactly. They've expanded into artillery systems,
Oh,
armored vehicles, and even marine underwater systems.
really?
This shift demonstrates their ambition to broaden their horizons and cater to a wider range of industries.
So this makes their tagline from tonnage to technology all the more fitting.
Yes.
Okay, so revenue is up,
Mm-hmm.
they're diversifying,
Yeah.
but what about profitability? Are they just expanding or are they becoming more profitable as well?
Well, this is where things get really interesting. Both standalone and consolidated profits are up year on year,
Okay,
and significantly so.
right.
What's even more promising is their normalized EBITDA margin, which jumped to 10.7%.
Okay, hold on, before we go any further.
Sure.
Could you break down what normalized EBITDA margin means
Of course.
for those of us who aren't finance wizards?
EBITDA stands for earnings before interest, taxes, depreciation, and amortization.
Right.
It essentially gives us a clearer picture of a company's operating profitability
Okay,
by removing factors like debt financing and accounting quirks.
I see.
And a growing EBITDA margin, especially when coupled with revenue growth,
Yes,
is usually a sign of a very healthy business.
that makes sense. So not only are they growing, but they're becoming more efficient at turning that growth into profit.
Right.
It's a winning combination,
It is.
but they're not stopping there, right?
Yeah.
I've heard about some acquisitions.
You're right. Bharat Forge has been actively pursuing growth through acquisitions.
Okay.
Back in fiscal year 23, they acquired JS Autocast, solidifying their presence in the castings market.
That sounds like a strategic move to bolster their existing capabilities.
It was. And then just last month, they announced an agreement to acquire American Axle India, a major player in the commercial vehicle axle market,
Oh,
pending approvals, of course.
this deal sounds like a potential game changer.
It does.
It seems like they're really serious about becoming a diversified manufacturing powerhouse.
Absolutely. This acquisition aligns perfectly with their stated goal of evolving from component manufacturing to a full-fledged supplier of aggregates and products.
It's all coming together,
Mm-hmm.
but it can't just be about profits and acquisitions.
Right.
What about their commitment to sustainability? Are they just talking the talk or are they walking the walk?
They seem to be walking the walk.
Okay.
Bharat Forge has set ambitious sustainability goals, aiming for carbon neutrality by 2040
Mm-hmm.
and an 80% reliance on renewable energy by 2030.
Wow.
They're also actively reducing freshwater usage in their operations.
Those are some impressive targets.
They are?
So they're clearly taking steps in the right direction.
Yes.
What about their social impact? Are they investing in their communities?
They are. Their investor presentation highlights a significant investment of $171.08 million
Yeah.
in corporate social responsibility initiatives in fiscal year 24.
Wow.
This covers a wide range of programs, including skill development, village development, and promoting human rights awareness among their workforce.
So it seems like they're trying to make a positive impact on multiple fronts.
Yeah.
That's good to hear. Now let's talk about the market's reaction to all of this.
Okay.
How did investors respond to the Q2 results?
The stock market reacted positively to the news, but the company itself is expressing a note of caution about the upcoming quarters.
Okay.
There's a sense of realism amidst the optimism.
That's interesting. Why the cautious outlook? Despite such a strong performance, what are they concerned about?
Well, remember their investment in Torque Motors,
Yes.
the electric bike manufacturer.
Right.
They had to take an impairment charge of $1,517.65 million
Wow.
related to that investment. The electric vehicle market is still quite volatile, and that's a risk they're keeping a close eye on.
That makes sense. It's a reminder that even with strong performance, there are always challenges to navigate. So if I'm walking into that investor meeting, what's the key takeaway about their financial performance so far?
I'd say the key takeaway is that Bharat Forge is demonstrating robust financial health.
Okay.
Despite a challenging global landscape,
Right.
their standalone performance is particularly noteworthy, showcasing their strength in the Indian market.
Okay.
They are effectively managing their debt and have shown impressive growth and profitability.
It sounds like they're in a strong position to continue executing their growth strategy.
They are.
But before we delve deeper into their future plans,
Sure.
let's take a closer look at the people behind this success story.
All right.
Who are the key players driving this transformation at Bharat Forge?
That's a great point. A company's success is driven by the people at the helm. So, let's get to know the key players at Bharat Forge, starting with the chairman and managing director, Mr. B.N. Kalyani. He's been instrumental in shaping the company's growth for decades.
He sounds like a true industry veteran. But what about the next generation of leadership?
His son, Mr. Amit B. Kalyani, serves as the vice chairman and joint managing director. With over 25 years of experience at Bharat Forge, he brings a fresh perspective and is actively involved in driving the company's strategic direction.
That's an interesting dynamic, a blend of experience and new ideas. And what about the rest of the management team? Are there any other notable figures we should know about?
Absolutely. Their investor presentation highlights several key executives, including Mr. Kedar Dixit, the chief financial officer, who's been with the company for over 2 decades.
So they've got a strong and experienced financial leader guiding them?
Yes, and then there's Mr. Rajagopalan S., Vice President of Investor Relations and Mergers and Acquisitions, also with almost 2 decades of experience at Bharat Forge. These are individuals who deeply understand the company's operations and strategic direction.
It sounds like they've got a solid core team with a wealth of experience. But what about oversight and accountability? What role does the board of directors play in all of this?
The board of directors plays a crucial role in ensuring good corporate governance. Alongside Mr. B.N. Kalyani and Mr. Amit Kalyani, the board includes several independent directors with diverse backgrounds and expertise.
So they've got a mix of internal leadership and external perspectives.
Exactly. The board includes individuals like Mr. Deepak B. Main, Ms. Sonia Singh, Mr. K.B.S. Anand, and Mr. Anand S. Pathak. Their diverse expertise ensures balanced decision-making and robust oversight.
And you mentioned Mr. Ashish Parat Ram earlier. What's his role on the board?
He's a non-executive, non-independent director, representing another layer of connection and influence within the company's governance structure.
It sounds like they've assembled a comprehensive leadership team and board to guide them on this ambitious journey. But with all this talk about their grand vision of becoming a diversified conglomerate, I have to ask, are they spreading themselves too thin? Is there a risk of losing focus?
That's a valid concern, but their approach seems to be quite strategic. They're not simply diversifying for the sake of it. Instead, they're leveraging their core expertise in engineering and metallurgy to expand into related sectors like defense and aerospace.
So they're building upon their existing strengths rather than venturing into completely uncharted territory.
Exactly. And their acquisitions are carefully chosen to complement their existing capabilities and provide access to new markets.
It seems like they're striking a good balance between ambition and strategic focus. But let's get back to their financial performance. You mentioned earlier that we'd dive deeper into the numbers. I'm ready to take the plunge.
All right, let's do it. Looking at their consolidated statement of financial results, their total revenue from operations for Q2 FY25 was $36,885.08 million.
And we already know this is slightly lower than the $37,741.87 million they achieved in the same quarter of the previous year. But their standalone revenue showed impressive growth. What can we learn from their segment-wise revenue breakdown?
Their consolidated segment-wise revenue provides some valuable insights. For the quarter ended September 30th, 2024, their forging segment contributed the most, bringing in $30,864.73 million. Their defense segment followed with $5,089.32 million, and their others segment, which includes their newer initiatives, contributed $2,338.89 million.
So forgings are still their main revenue driver, but it's encouraging to see that both defense and others are making significant contributions. What about the half-year figures?
For the half year ended September 30th, 2024, forgings brought in $64,643.74 million, defense contributed $11,506.32 million, and others generated $4,466.31 million.
It's clear that all three segments are on an upward trajectory. This diversified revenue stream certainly strengthens their overall financial position. But revenue is only one side of the equation. What about their profitability? We talked briefly about their EBITDA margin earlier, but I'm curious about the specifics.
Their profit figures paint a very positive picture. In Q2 FY25, their standalone profit before tax was $5,019.14 million, a substantial jump from $4,616.000 million in the same quarter of the previous year. On a consolidated basis, their profit before tax for Q2 FY25 stood at $2,995.44 million.
So both their standalone and consolidated profits are showing healthy growth. But I remember you mentioning a key metric for investors, normalized EBITDA margin. Could you remind us what that is and what their figures look like?
Of course. As we discussed earlier, EBITDA, earnings before interest, taxes, depreciation, and amortization, provides a clearer view of a company's operating profitability. A growing EBITDA margin, especially when coupled with revenue growth, indicates a very healthy and efficient business. In the first half of fiscal year 25, their normalized EBITDA margin reached 10.7% compared to 8.9% in the first half of fiscal year 24.
That's a significant jump. It seems like they're not only growing their revenue, but also becoming much more efficient in converting that revenue into profit. It speaks volumes about their operational excellence and cost management.
Exactly. They're demonstrating strong financial discipline, which is crucial for any company, especially one pursuing aggressive growth and expansion.
Okay, so they're growing, they're profitable, they've got a great leadership team, and they're committed to sustainability. It almost sounds too good to be true. Are there any potential red flags investors should be aware of?
Well, as with any investment, there are always risks to consider. We've already talked about the volatility in the electric vehicle market and the impairment charge related to their investment in torque motors.
Right, that was a good reminder that even promising ventures can face challenges. What other potential risks should investors be aware of?
They operate in a cyclical industry, so their performance can be affected by factors like global economic conditions, commodity prices, and currency fluctuations. For example, a sudden surge in steel prices could impact their input costs and potentially squeeze their profit margins.
That's a good point. It's essential to consider these external factors that could impact their performance. But let's shift our focus back to their financial health for a moment. You mentioned earlier that analyzing key financial ratios can provide deeper insights. Which ratios would be most relevant to investors, and what can we learn from them?
You're absolutely right. Financial ratios can reveal a lot about a company's financial health and performance. For investors, some of the most important ratios to consider are their debt-to-equity ratio, current ratio, debtors turnover ratio, inventory turnover ratio, and return on net worth, RONW.
Okay, that sounds like a lot to unpack. Let's start with the debt-to-equity ratio. What does this ratio tell us, and what are Bharat Forge's figures?
The debt-to-equity ratio essentially measures a company's financial leverage, how much debt they're using to finance their assets relative to their shareholders' equity. A higher ratio generally indicates higher financial risk. For Bharat Forge, their standalone debt-to-equity ratio was 0.46 in both September 2024 and March 2024, indicating a healthy financial structure. On a consolidated basis, it was 1.00 in September 2024, slightly lower than the 1.01 in March 2024.
So it seems like they're managing their debt levels quite effectively, which is always a positive sign for investors. What about their short-term liquidity, their ability to meet their immediate financial obligations?
Their current ratio, which measures short-term liquidity, provides insights into that. A current ratio above 1 is generally considered healthy. For standalone figures, Bharat Forge's current ratio was 1.43 in both September and March 2024, indicating a comfortable position. For consolidated figures, it was 1.04 in September 2024, slightly higher than the 1.02 in March 2024.
So they seem to have sufficient liquid assets to cover their short-term liabilities, which is reassuring. What about their efficiency in collecting payments from customers? That's always a crucial aspect of financial health.
That's where the debtor's turnover ratio comes in. This ratio measures how quickly a company collects its receivables. A higher ratio indicates better efficiency in managing their cash flow. For standalone figures, Bharat Forge's debtor's turnover ratio was 0.59 in Q2 FY25, slightly lower than the 0.62 in Q2 FY24. However, for consolidated figures, it was a healthy 1.22 in Q2 FY25.
It's interesting that their consolidated debtors turnover ratio is much higher than their standalone figure. Does this suggest that their international operations are more efficient in collecting payments than their domestic business?
That's a possible explanation. It could also be due to variations in payment terms and industry practices across different regions. It's worth noting that they are generally efficient in managing their receivables on a consolidated basis, which is a positive sign. Now, let's move on to their inventory turnover ratio.
Okay, tell me more about that one. What does the inventory turnover ratio measure?
This ratio measures how quickly a company sells its inventory. A higher ratio generally indicates better efficiency in managing inventory levels, which can positively impact profitability. For Bharat Forge, their standalone inventory turnover ratio was 0.68 in Q2 FY25, slightly lower than the 0.75 in Q2 FY24. For consolidated figures, it was 0.47 in Q2 FY25. This indicates that there might be some room for improvement in managing their inventory levels.
So they're holding onto their inventory for a slightly longer period than before. What could be some possible reasons for this?
There could be several factors at play, such as strategic stockpiling in anticipation of future demand, changes in demand patterns, or potential supply chain disruptions. It's worth noting that they operate in a sector where holding a certain level of inventory is necessary to meet fluctuating demand, but it's definitely something to keep an eye on as we track their performance.
Good point. Now, you mentioned another important ratio for investors, return on net worth, RNW. What does this measure, and how does Bharat Forge perform on this metric?
RNW is a key profitability ratio that measures how effectively a company is using its shareholders' equity to generate profits. A higher RONW indicates better returns for investors. For fiscal year 24, Bharat Forge achieved an impressive RONW of 12.7%, a significant improvement from 7.6% in fiscal year 23.
Wow, a jump from 7.6% to 12.7% is very impressive. It seems like they're becoming increasingly efficient in utilizing their shareholders' investments to generate profits.
Absolutely. This indicates that they're creating value for their shareholders and utilizing their capital effectively.
So to summarize what we've learned from these key financial ratios, it seems like Bharat Forge is in a solid financial position. They're managing their debt well, they've got good liquidity, and they're generating strong returns for investors.
That's a fair assessment. However, it's important to remember that past performance is not always indicative of future results.
Right, and we've also identified some potential risks and areas where they could improve. But overall, it's a very positive picture. Now, with all this talk about their current performance and financial health, I'm even more curious about their long-term vision. What are they striving to become? Where do they see themselves in the future?
That's a great question, and it's crucial for understanding any company's potential. Let's delve into their vision and explore the path they've charted for their future. Their vision is to transform from simply a forging company into a well-diversified manufacturing conglomerate.
Oh, yeah.
With expertise spanning engineering and metallurgy. They want to evolve from being just a component manufacturer
Right.
to a supplier of complete aggregates and products
It sounds like they're aiming to become a one-stop shop for their customers,
Right.
offering a much broader range of solutions.
Exactly. And their strategic acquisitions like JS Autocast and American Axle India
Right.
are key steps towards realizing this vision.
Right. Those acquisitions not only expand their capabilities, but also give them a stronger foothold in new markets.
Hmm.
But this level of expansion requires significant investment.
It does.
How are they planning to fund these ambitious plans?
Well, their strong financial performance is certainly a major factor. Their improving profitability reflected in their growing EBITDA margin, and RONW
Right.
generates internal resources for investment.
So they're reinvesting their profits back into the business to fuel their growth.
Precisely. But they're also actively exploring external funding options.
Okay.
Their board recently approved equity investments in several Bharat Forge Group entities,
Hmm.
indicating a willingness to leverage strategic partnerships and external capital.
It sounds like they're taking a multi-pronged approach to financing their growth.
Yes,
Which makes sense given the scale of their ambitions.
it does.
But financial resources are only part of the equation.
Right.
They also need the right people and the right technology to execute their vision.
Absolutely. They're investing heavily in research and development,
Okay.
collaborating with leading institutions and organizations globally.
Okay.
A prime example is the Kalyani Center for Manufacturing and Innovation in Pune,
Okay.
which focuses on advanced manufacturing techniques and developing cutting-edge solutions.
That's impressive. It shows that they're serious about staying ahead of the curve and fostering a culture of innovation.
Exactly. Their vision isn't just about expansion and diversification.
Mm-hmm.
It's about embracing technology,
Yeah.
pushing the boundaries of innovation, and developing sustainable solutions for the future.
We've talked about their push into defense and aerospace, leveraging their forging expertise to create components for these high-tech industries.
Yes.
What other areas are they exploring as part of their long-term strategy?
One area they're actively pursuing is e-mobility. They're developing power electronics for electric and hybrid vehicles,
Yeah.
recognizing the transformative potential of this sector.
It's interesting how they're not just adapting to the changes in the automotive industry.
Right.
They're actively shaping its future by positioning themselves as a key player in the EV space.
That's right. And this forward-thinking approach is evident in their sustainability initiatives as well.
Right.
Their commitment to carbon neutrality and renewable energy sources demonstrates a recognition
Yes.
of the long-term challenges facing the manufacturing sector.
So they're trying to build a business that's not only profitable,
Yeah,
but also responsible and sustainable in the long run.
exactly. And that's a powerful message to convey to investors who are increasingly looking for companies that align with their values.
Okay. We've covered a lot of ground today.
We have.
We've explored Bharat Forge's impressive financial performance, their strategic acquisitions, their ambitious diversification plans, their commitment to sustainability, and their vision for the future. If I were to summarize all of this for that investor meeting,
Yes.
what would be the key takeaways?
I'd say the key takeaways are that Bharat Forge is a company in transformation,
Okay.
driven by a bold vision and a commitment to staying ahead of the curve.
Okay.
They're demonstrating strong financial performance, strategic foresight,
Yeah.
and a willingness to embrace innovation.
Yes.
They're not just reacting to industry trends, they're actively shaping the future of manufacturing.
It's clear that they're not content with simply being a forging giant. They're aiming to become a global leader in both traditional and electric vehicle components,
Right.
while also expanding into new sectors like defense and aerospace.
And their commitment to sustainability underscores their understanding of the
Yeah.
long-term challenges facing businesses today.
Wow.
We're not just focusing on short-term profits, but also building a company that can thrive in a rapidly changing world.
Well, I have to say, after this deep dive, I feel much more confident about walking into that investor meeting. Thank you for guiding us through this complex information and highlighting the key insights.
It was my pleasure. And remember, even though our deep dive has come to an end, your deep thinking about Bharat Forge and its future has just begun.
That's a great point. It's clear that Bharat Forge is a company to watch, and I'm excited to see how their story unfolds in the coming years.
Me too. They're a fascinating example of a company that's not afraid to embrace change and pursue ambitious goals.
And on that note, we'll leave you with this final thought. Can Bharat Forge truly become a global leader in both traditional and electric vehicle components? The deep dive is over for today, but your deep thinking just began.